Hi, welcome everyone to the Tradimo live webinar. Thank you for coming. And as usual, I'm just checking the sound, and if the sound is all okay, yes, it's okay. I'm just going to quickly summarize what we have been covering over the past weeks and what's going to be covered today. So today, just like in the last 2 weeks, we have had Victor Neustrov, trader and educator, with us, who has been holding a 3-part webinar series, and we call this the 2016 year-end volatility webinars. In the webinar 2 weeks ago, we've covered the Trump presidency and its implications on the stocks and US dollar. Last week, Victor presented one of his news trading strategies, and today he'll show you how to trade with trend lines. He's been trading the market since 2003, and he's active in the FX and commodities space, but his true passion is options. If you'd like to find out how he trades, just visit the links in the description. You'll find 5-6 trading courses from him on our course platform. This webinar was brought to you by Trade360, the crowd trading broker. Trade360 has revolutionized the concept of online trading with the introduction of crowd trading, a unique technologically advanced approach to trading of currency pairs, commodities, stocks, CFDs, and indices. Currently, Trade360 offers up to $5,000 deposit bonus for first-time depositors. For more information and to open an account, just click the link again in the description below. And now, without further delay, I'd like to introduce Victor in the Tradimo Live webinar. Victor, please start your presentation.
Thank you, Peter. Hello, everyone, and thank you for joining this webinar. And first, let me introduce myself. As Peter said, my name is Victor Neustrov. I'm an option trader and a commodity market analyst. And you may know that I prefer trading options on agricultural commodity futures because I consider these markets to be more transparent than any other markets. In commodity markets, almost everything depends on supply and demand factors. And if you know how to analyze them, you will definitely succeed. And this is my third webinar on Tradimo, the last one in series. And today we will be speaking about trends and trend lines. I'm going to show you a strict procedure how to draw a trend line. It has been long known that every trader draws a trend line in his own way, but I will teach you a formal procedure, and you will have no doubts whether you draw something wrong or not. What else I prepared for you on this webinar? I'm going to reveal one of my strategies that I used when traded Forex. And in this strategy, you don't need to use a trend line. We will recognize the trend using moving averages. And at the end of this webinar, I will tell you how to keep your brain trained and how to improve your trading and analytical skills. Okay, let's start. And first, I'm going to tell you what trend is in general, and when we can say that trend exists on the market.
Just quickly, let me interrupt you. Your screen is not shared yet. I don't know if you're planning to share it at this stage.
Yeah, no, I'm going to share it.
Great, thank you.
Okay, I believe now you see that. A trend is a general direction of a market or of the price of an asset, and trends can vary in length, from short-term to intermediate and to long-term. And of course, you may know that as a general strategy, it is best to trade with trends. It means that if the general trend of the market is headed up, you should be very cautious about taking any positions which are opposite to the general trend. Okay, well, now let's discuss trend lines. A tool that traders use to identify a trend in every market is a trend line. And a trend line is a line which is drawn between high and low point for an asset over a period of time. If the asset price goes up from 10 to 20 to 30 over a 3-year period, the analyst can plot the line from 1 to 30, starting in year 1 and ending in year 3. The first year marks the first plot in the series. It is the baseline price of 10. The second year represents the beginning of the trend at 20. And the third year marks the continuation, or possibly the end of the trend at 30. So in this way, trend lines can be used to predict the next data point along the trend, or to look for a reversal of the trend. Trend lines can also be used to form a channel marked by 2 lines. As you can see it here, one line is created by trends in the highs, and another line is created with trends in the lows. Oh, something like this. It's DAX 30. This is a German stock index, and here you can see M15 time frame. Okay, and now I would like to show you how I draw a trend line. This is a formal procedure. I'll show you everything step by step. Okay, let's start. Okay, for example, I want to analyze this period, and it's a crude oil daily chart. What we should do first? The first step is to define the beginning of upside movement and to define the first minimum. Here it is. If we find the minimum if we see an uptrend, and we find the maximum if we see a downtrend. So in our case, we should find the minimum. It will be a start point of short-term upside trend. Now, let's define the highest maximum. It's here. The third step is to find another minimum just behind this maximum. It's here, this one. And now we can draw a trend line using these two minimums. This one and this one. But pay attention, please. A trend line can't cross the price between these two, between this and this point. But now we see that it crosses. That's why we must adjust it. In this case, when price is crossed, we need to use only the second minimum. So I mean this one. and find another minimum instead of this one. For example, we should take the next one. This is how we do it. Now it's okay. We don't see that the price crosses the trend line. Now it's perfect. Let me take another chart. Okay, for example, we are going to analyze this period. This is this is the starting point of the uptrend, so it will be the first minimum. This is the highest maximum, and we should find the minimum behind it. Here it is. Okay, this is how we draw a trend line. But now we see that the price here and here crosses the trend line. That's why we need to adjust it. We need to use another minimum. Now it works. Let me show another one. This is British pound against Australian dollar, H4 time frame, and we also see an uptrend here. This is the beginning. This point is a start point of an uptrend. Here is the maximum, and this is minimum behind this maximum. So we should connect these 2 points. But now we see that price crosses the trend line many times. We should adjust it. Okay, what if we use the second minimum? It still crosses. Let's take another one. Now it's okay. This is how we should do it. Okay, another example. American dollar against Japanese yen. And you may see that trend line is drawn here. So how we should do it? We should, okay, let me delete it. This is the beginning of an uptrend. This is the highest maximum, and this is this one. It's a local minimum behind the maximum. We use these 2 minimums to draw a trend line, and now it works. Okay, now let's repeat this procedure for downtrend. Okay, we see a downtrend in this period. It's a daily chart of gold. This is the beginning, the start point of the downtrend. This is the lowest minimum. And this point is the maximum behind the lowest minimum. We should draw a trend line this way. First we use this point, and then another point. Now you see that at this candle, the price crosses the line. That's why we need to adjust it and use this maximum. Now it's drawn correctly. Another example. It's euro against British pound, H4 time frame. It can be the highest maximum, so it's a beginning of a downtrend, and this is the lowest minimum. Okay, and the maximum behind the previous, the lowest minimum is here. So we need to connect this maximum and this one, not this, not the next. Okay. Okay, but you see that the price crosses. If we use the next maximum, then it looks perfect. Moreover, we have at least 2 more points on this trend line. For example, what if we choose another time frame, H8? Actually, it's not popular, but we can try. It's not what every trader uses. This is the minimum. This is the previous maximum behind the minimum. And it actually, the beginning of downtrend is here, but now you see that the price crosses the line. That's why we need to find another minimum, or I mean to find another maximum. Okay, here it is. Now it's drawn perfectly. Okay, and what about H1 time frame? Okay, it's still in a downtrend, but it seems that the trend is going to change soon, I think. Okay, but let's try to draw a trend line. This is the starting point of a downtrend, and this is the lowest minimum. So we should find a maximum behind this minimum. It's here. Now we connect these 2 points, and this is how we draw a trend line. And you see that trend line here is broken. So if you are looking for trend change, then you should monitor this market. Okay, and another example, another 2 examples, because I want to show you a core market with which I like most. For example, H4 time frame, and this is a downtrend. This is the lowest minimum, and this is the beginning of downtrend. This point is the previous maximum behind the lowest minimum. So we connect these 2 points here. But the price crosses the trend line between these 2 points, and we need to redraw it. Maybe here, or to be more exactly, we should use this this maximum. Now it's perfect. Okay, another example is Euro USD. This is the minimum, the lowest minimum. Here is the previous high. And this is the beginning of downtrend. So we need to connect them. This is how we should draw a trend line. And again, it was broken. So maybe we should think about trend change in this market. This is what I'm going to tell you in the next part of this webinar. I will describe you a three-step method. This three-step method will help you to avoid losing trades and also to find great trading opportunities. It correctly predicts a trend change from 60 to 80% of the time. So the three steps are here. The trend line is broken. And the second one is that there is a retest and a failure. And the third one is that price falls below the prior low if we are speaking for an uptrend. So these three steps define a market that has moved from an uptrend to a downtrend. Okay, let me show you on the chart. Okay, for example, we will use American dollar against Canadian. This is H4 time frame. And for example, we decided to analyze this period, and we see the beginning of an uptrend, the highest maximum, and the minimum behind it. We connect these 2 points, and now we see a trend line. Okay, here the trend line was broken. And it was 2 attempts to retest the previous high, this one, the highest point. And both of them failed. And then the price fell below the prior low. This is the prior low, and this is a moment when price fell below it. Then it fell again. So that's why we see that the change trend in this market, and now we should draw another trend line. Let me do it. This is the lowest minimum, and this is the beginning of a downtrend, I think. So this is how we should connect them. You better use another maximum. This one, yeah. Now it works. This is another trend line which defines a downtrend. It was an example when an uptrend changed to a downtrend. I have another example. This is Millennium and H1 time frame. And again, we see an uptrend. We draw a trend line. But what happened next? Then we see that the trend line was broken and the price fell. There was an attempt to retest the previous high, but it wasn't successful. So then the price dropped, and it dropped below the prior low, so below this level. That's why the trend changed. It's H1 time frame, and we are speaking about short-term trends. This is the lowest point. This is the previous maximum, and it can be the beginning of a downtrend. So we need to connect them. That's the price process, the trend line, and we need to adjust maybe this way. So this is another trend line, and now you see that the second trend line is also broken, and then we should monitor the market for the retest of the previous low. Maybe it was a retest, and maybe in the next 8 to 10 hours we will see an uptrend in this market. And now I'm going to demonstrate you how trend changes from a downtrend to an uptrend. Now we will choose stock market. We will analyze Walt Disney stock, and it will be H4 time frame. Okay. In this analyzed period, we see that it was a downtrend, and this is how we draw a trend line. Then it was crossed. Then we see that it was an attempt to retest the previous low, so this low, and it failed. But then price was higher than previous maximum, and it means that the trend changed. So now it's an uptrend. Let me draw another trend line. This is how we do it, but of course we need to adjust it because the price crosses this trend line. So maybe this way. No, not this. This way. Okay, and now I'm going to show you another interesting example. It will be American dollar against Swiss franc. It's a daily chart. Okay. It was a downtrend here. Yeah, it was here. So this is the low minimum. This is the previous high. And this is the beginning of an uptrend. Okay. We draw a trend line. The price crosses it. So we need to adjust it. Now it's okay, but we see that the price, and now we see that trend line was broke. Okay, what else? Now, then there was an attempt to retest this low, and it was and it failed. But only a few days later we see that the market was higher than previous low, or the previous high that we should use to compare to this price. Okay, so only at the end of October we see that the trend changed. Okay, so I think that now we are finished with trend lines, and now I'm going to show you another way how to recognize the moment when trend occurs. So you're going to learn about the strategy which I used to use when I traded Forex. I wouldn't say that this strategy contains a secret indicator. Everything is available to everybody, but I've combined some simple indicators, found best markets for this strategy, and adjusted all input parameters. Today, I'm going to tell you about the strategy that I called Rainbow. Here is an example, but I'm going to switch to our chart on the Trade 360 website, and I will demonstrate you everything there. So you may open your trading platform that you are used to, or you can just open the chart to get the signals. So let's open the chart. This strategy can be applied in any time frame, but I recommend you to use M15 and Euro USD. Of course, you can also use this strategy on for British pound against American dollar or Australian dollar against American. But I don't recommend to trade cross courses with this strategy. So let's go back to our chart. What you should do first, you should set 5 moving average indicators with different periods. 5, 14, 21, 65, and 120. All of them should be using open prices and be based on the exponential model. So I'm going to do it right now. The first one will be red. The second one, the period is 14, and we will choose orange color. The third one, the period is 21, yellow. The fourth one, uh, 65, and it will be green. something wrong happened with my with one of my moving averages. Which one? With 14 period. Okay, 14. Yeah. No, not yellow, orange. Okay. And the last one. The period is 120. It will be blue. Okay, now you see it. I also recommend using stochastic oscillator as an additional indicator to filter signals. Let me add it to this chart. Stochastic full. And parameters should be 5, 9, and 3. Okay, to get a trading signal, you ought to be sure of 5 rules, and let me show you all of them. The first one, all 5 moving averages were in a very low range, 5 to 10 pips for at least 3-4 hours. It means that this market was flat. I'll show it to you. For example, here it is, this period. For example, this period. You may know that the common rule tells that flat market follows each trend, and every trend ends with a flat market. Thus, you have to find a point when the last trend ended. So this is the point when the last trend ended at. And now it's time for new trend. You can see that it happened in this dedicated area. The second rule is that all moving averages should be located in the right order. So if you are waiting for an uptrend, then red one should be higher than orange, orange higher than yellow, yellow higher than green, and green higher than blue. The third one is that if we are waiting for an uptrend, stochastic with parameters 5, 9, and 3 should demonstrate a local low in the same time when all moving averages are in a tight range. For example, here. This is the local low when all moving averages are in a tight range. Okay, to get the signal, the distance between a red line and the blue one should be 3 times as high as it was during the period of consolidation. So we will get a signal here. So for example, you can buy here, and then you will close the trade using your stochastic here. And it will help you to earn at least 20 to 25 pips. Okay, and actually there is a fifth rule in this trading system. This rainbow should be widening on 2 different charts. For example, Euro USD and British Pound USD. Or for example, Australian dollar against American and New Zealand against American. What else? It's crucial to choose the right timing for opening the trade. The best time is when 2 sessions cross. For example, Asian and European, or European and American. Usually, forex market moves during these periods. I believe that accurate using of this strategy will certainly bring you profit, but please don't violate any of these rules. Please be accurate. What else? Actually, now I will give you special advice how to keep your brains well trained. I will be speaking about chess. Do you know that chess players are successful traders? No one has ever collected statistics, but based on my own experience, I can affirm that. I know many cases when people who were good at chess became successful traders. And moreover, when you apply for a trader job, interviewer may ask if you're a chess player or how good you are in mathematics. Why? Because traders and chess players possess the same skills. Let me explain it to you. There are 3 things about chess you should know. First, playing chess keeps you concentrated. Common things happen on the market. When you need to make a decision to enter or exit the market, you should be totally focused on it. Why? Because your profit loss depends on your current decision, whether to stay or to take any actions. And you can make a right decision only in case if you're focused on it. The next thing is that playing chess teaches you to predict unknown situations. As a chess player, I can tell you that it's impossible to predict every move of the opponent. But if you're a strong player, you can predict most of them. Not all, but most of them. The same thing occurs on the market. You have to consider how to react if different market scenarios realize. What if price goes down or up, or what if it's flat? And the third thing is that learning chess can distract you from your routine. And when you come back to the markets, you will analyze these markets from the other side, from another angle. This always happens to me when I have to make an important trading decision. I often try to play chess or solve puzzles, and only after that I come back to the market. From my own experience, I can say that this is a very helpful method. If you know how to play chess, then I highly recommend you to play from time to time. You can use any of the popular chess websites you know. If you don't want to play against human, you may play against a computer, or you can just try to solve a few puzzles. It also helps. Okay, actually, thank you for your attention, and it was all I wanted to tell you at this webinar. And if you want to know more, you can contact me. If you have some questions, don't hesitate to ask them right now. I will answer.
There is actually a question asking whether to use shadow to draw trend line. I'm not sure if you answered that question.
Um, no, I didn't answer, but okay, let me do it right now. For example, I will open a new chat. So here, yes, exactly. We should use a shadow uh, because it all depends on time frame. For example, if we use H1, then there will be no shadow. It will be shadow only on daily time frame. And so we use trendline. One of the reasons why we use trendline because we need to find the moment when this line was broken and we need to find the moment when trend changes. And sometimes um, we see that the price breaks the support and resistance levels also. So if we use shadows to draw a support or resistance level, why not to use them to draw a trend line? It's the same, I think. Are there any more questions?
Not from the audience. So basically, you say that shadows should always be included. And what about when they're like extreme, like a news announcement and like visually it's more compelling to just use the bodies because there's such an outlier wick. I don't know if you're able to find any example of that.
Yeah, I will be
But
able.
usually around
It's
like elections, there sometimes
yeah.
or NFP there's such a week, and somebody just can say like, well, this the whole price action is in a beautiful channel. If only that massive wick wasn't there, and I have no idea what to do with it. Is my channel still valid? I don't know if it makes sense to you or for the audience. I
Um,
have come across this situation many times. Oh, there is one actually.
yeah, there is
Just
one. The day of election in the United States. Um, actually, uh, I prefer not to trade during such days because it's very hard to predict the market. For example, I consider it that Clinton should win, but we see that Trump will be American president, and that's why the market reaction is so. Uh, so as for me, you should stick to the formal procedure and use the shadow even if it's violate your channel or anything, because yeah, maybe you will get a loss at this moment, but you'd better to stick the procedure because next time it will bring you profit. So it will be hard for you to identify whether to use this shadow or not. And for example, this one, it lasts not only for 1 minute, it lasts for many hours. And if we switch to H1 time frame, no, it's actually this chart won't. Here it is. It was 4 hours when the price rose. 4 hours in a row, four candles, one, two. Here it is. So that's why I think we should use it. It's in H1. It's not a shadow. If maybe sometimes, for example, when we speak about something like non-farm payrolls, and we see that it was just a spike, maybe in 1 minute, and then the market became calm, or the price just was in a tight range, then we can ignore it. But anyway, I still recommend you to stick to your formal procedure that you use every time. Don't violate any of this rule because it will lead to a loss.
Okay, fair enough. Thank you, Victor. The webinar meant to be like about 40-45 minutes plus a little bit of Q&A, and now we're past 50 minutes. So thank you again for the presentation, and I hope that everybody found great value in it. This was the last webinar of the 2016 year-end volatility webinar series, and for future webinars, please watch out for our announcements. Again, this webinar was brought to you by Trade360, the crowd trading broker. They currently offer up to $5,000 deposit bonus for first-time depositors. Thank you again for coming, and we hope to see you in our next session. Thank you. Bye-bye.
Okay, thank you. Bye.